All right, good morning then, and yeah, pretty ugly market again. 2016, we've seemed to have got out of the wrong side of the bed this year. Ugly stuff when you're looking at risk assets, and more of the same this morning. So important levels to look for. You know, we've had some decent downside on the equity space. S&P is already down 1.2%. Just on some daily charts here, looking at some technicals. Excuse me. So for the S&P, December's low, obviously highly important. It was also, just by the way, the low point mid-October here as well. So anywhere around 1983. Very important. Tested on Monday. 2.5% to 3% sell-off got us down there, and that was the key support level that held things up, and we got a good 1% bounce off that price. It's just that we're back down here already, almost. So 1983 is important. You know, as it stands at the moment, you would certainly expect this market to drive down through that price as we go into the end of the week. Whether that happens today, whether it happens this morning, could do. We've certainly got enough, I would say, well, negative sentiment. We do have data ahead of us, packed session for data though, so that sentiment can, well, I don't think, well, I'm not sure it can reverse, but it can certainly calm if we go through the Eurozone services PMI numbers and they come in better than expected. That can help to calm the nerves, but for now, certainly we continue the theme of the year, which is a negative mindset. So 1983 on the S&P, a break of that, and you're looking at a 3-month low, of course, and just continuing the downward trend that really started in May, as I've been talking about over the last couple of briefings. So equities on the back foot, 1% and more down in the US already. The DAX over here on the right, and then European stocks generally not as bad, but Europe took a much bigger hit on Monday than the US did. DAX dropping 4.5%. It added to losses yesterday. The DAX down 0.79%, and we're down about 1% now as we make new lows, testing yesterday's low. Now, the important thing about the DAX is also the December low. Now, the S&P tested that on Monday, 120 roughly. That's where we have the kind of equivalent important technical support. It's strengthened by the fact it's a fib level here, 61.8% fib level of the October through to November rally. So keep an eye on these technicals. Risk off is certainly the theme, because when you look at safe haven debt, it's going the opposite way. Here's the Bund. Let me just make this chart a bit wider. Important technical break on the Bund this morning, up through that high point that we had mid-December, on the 11th of December. So continuing to reclaim the massive losses seen on the 3rd of December when Mario Draghi under-delivered at the last ECB press conference. So we were pretty much not quite all the way back yet, but you know, anything above the 160 handle, and that's a full retracement of Draghi's losses. So important technical break this morning for the Bund. So safe haven debt rallying. You've got equities under pressure. Oil's also under pressure. Here's WTI crude on the right, on the bottom right here, and so new low for the year, but you still got the mid-December lows, another $1 and a bit more to the downside. It's just that Brent crude has made a new multi-year low this morning. The spread between the two has narrowed, and in fact it's closed, and that's in large part perhaps due to the fact that the US lifted their export ban, but yeah, WTI new lows for the year, but Brent more significantly new lows since 2009. So oil under pressure this morning. So what's going on? What's driving this? And it's China really, as well as just a general sense of, well, just general global negative sentiment, I'd say. I'll talk about US GDP expectations in a minute. But first, China. So actually, Chinese stocks haven't been damaged, particularly today, but it's more about the data, and it's more about, why have Chinese stocks stopped selling off? So it's 7% losses on day one for the year. The government stepped in. So why didn't they sell off yesterday? Well, government buying of equities, directly intervening in the market. Also, one of the reasons for the sell-off on Monday was a bit of panic selling ahead of what was going to be the end of the selling ban. So back in the summer of 2015, Chinese equities were plummeting, and one of the measures implemented by the government was to ban certain people from selling equities. And the rule is if you own more than 5% of the equity in any company, you're not allowed to sell any of it. So banning large shareholders from selling in an effort to try and stop the market going down. That selling ban was due to end on Thursday this week, i.e. tomorrow. So these guys would have been able to sell on Friday. It's just that they scrapped that and the ban has been extended. So this is another measure. So the Chinese government has directly intervened buying equities, and they've lengthened the ban now. They've lengthened the ban indefinitely until they formulate new permanent measures to try and prevent large shareholders from selling huge blocks of stock in the market. All right, so the Chinese have been very busy in halting the downside. The other thing from China, two other things: more yuan devaluation again. So the People's Bank of China fixing the rate this morning at 0.22% lower again, seventh markdown in a row. And now this puts the yuan at a 5-year low. We're back to 2011 levels. So the devaluation continues. This is bad news for the rest of Asia. So you've got Asia generally underperforming this morning. Asian stocks down in the kind of region of 1%, although China's stocks aren't. The other thing from China then is the data. So we've got services sector data, and this is the feature of today. And let me just bring in the data calendar to just show you. Today's, certainly this morning's all about services PMI. And this afternoon, big number from the US at 3 o'clock in the shape of the ISM non-manufacturing. But first out of China, you can see we've got European numbers coming. France at 850, Germany 855, Eurozone 9, and then UK at 930. But the China figures overnight came in below expectation. We got a 50.2 print, and that is the lowest since the middle of 2014. The problem with this is we got manufacturing numbers from China on Monday that were also very disappointing. And you've actually, when you add them up, with these PMI numbers, you get two components, manufacturing and services, and you add them up to get what's called the composite PMI, and that is now below 50. It's the first time China's composite PMI is below 50 for several years. So just further, I guess, ramping up that one of the key fears about this year, and that is that China's growth is slowing, and it's going to start slowing at a faster pace. And, this is creating panic in the stock market. And, what are China going to do about it? So, one of the big fears of this year is really has escalated a little bit at the very, first few days of the year. And this is what's kind of driving everything. So that's why you got this negative sentiment. Also, other stuff like, why is the S&P underperforming today? It's down much more so than European stocks at this point. And perhaps this is because of the fact that slowly the realization is that Q4 GDP for the US, which isn't due for release till the end of the year, end of the month, it's looking like it's going to be pretty bad. You only got to go back about a month when we had people forecasting about 2% growth for Q4 for the US. Now we're kind of down, like Deutsche revised down their Q4 growth to now 0.5% yesterday, and they said even that might be too high. What seems to have happened, and we talked about this in end of October, we talked about this in November, we talked about the fact that the Q3 GDP figure got revised higher mainly as a result of inventory building. This is companies seeing their inventories increase. So, and we talked about how this was actually not good news, even though GDP was being revised higher for Q3. We were talking about the fact that this isn't good news because it's stealing growth from Q4. Because what seems to have happened in the end of Q4 is now the opposite. You're getting companies running down their stock levels. This means less production is going on, which means less GDP. So looks like Q4 GDP growth is going to be disappointing. This is perhaps maybe weighing on some of these US assets as well as oil being, of course, under pressure, which is certainly helping. So this is kind of the theme of the session so far. Just to say then, on the US data front, what we have is ISM non-manufacturing. It's due at 3 o'clock. This is a massive number. It's a massive number because the manufacturing data was really weak on Monday from the US, the weakest, again, another new sort of multi-year low. Now, as it stands, and here's the ISM, so the services PMI, if you like, chart. And as it stands, this has been pretty strong, in fact, very strong in the second half of 2015. All right, we slipped a touch in November, back below 56, but it's still solid. And this has been making up for the fact that manufacturing's been really weak. Today, we're expecting another number around 56. It needs to be up around 56. It's got to come in line at least this. If it falls below 55, which some analysts are fearing, then things are going to start to look pretty ugly. You know, you can't have both PMIs, like China, both PMIs very weak. And when you add in the fact the Fed are hiking, this is the problem with US data. If it starts to deteriorate, you know, gone are the days of the Federal Reserve propping things up with stimulative policy. It's the opposite now, they're tightening. So we're vulnerable to weak US data. So this is why the GDP downward revisions is a bit of a worry. And if you get more, these are lead indicators, these PMIs, and if you get the services PMI tracking down towards the weak manufacturing number, then certainly this is going to increase the nervousness about economic strength in the world's biggest economy, coupled with the nervousness about economic strength in the world's second biggest economy, which is China. So China weakness certainly playing on the commodity space, oil lower, as I've said. So definitely risk off. Let's just finish. We've got data coming now, so I'm going to get off the mic. We've got 4 minutes till France. Then more importantly, Germany at 8:55, the Eurozone at 9 o'clock. This is the services PMIs. These have been strong, and actually, having just painted a pretty gloomy picture there, talking about the US and China, actually the world's second biggest economic region is the Eurozone. And actually, thankfully at least, we've got one of the world's sort of powerhouses seemingly heading in the right direction with improving economic conditions. And we want to see this confirmed further with the services sector PMIs this morning. We've got decent manufacturing numbers again earlier in the week. And so what we're expecting here from France is a services PMI of 50, which is the same as last month's. France have been a kind of weak spot here. Germany's been much more impressive. 55.4 we're expecting. These are the final readings for December. We've already had the preliminary ones, so we're looking for these to all come in line with the preliminary data we got a couple of weeks back. Okay. With the Eurozone as a whole, we're expecting the composite, that's adding up both services and manufacturing to come in a nice and solid 54, and confirm the fact that it looks like Europe's heading in the right direction for now. So I'm going to get off the mic. We've got France in 2.5 minutes, then Germany, then the Eurozone, then the UK. We'll talk about that nearer the time at 9:30. Cable's been under a lot of pressure. New 9-month low again this morning. It's eyeing up the April 2015 low. And I'm just watching the yen continues to strengthen here. Another new high for the yen. So that's risk off, remember. So look, You've got your correlation in play here. When the yen strengthens, stocks make new lows. This is the S&P on a 5-minute chart. We're testing this overnight Asian session low here from about 3 a.m. Keep your eye on the yen for guidance on this risk-off trade. Okay, that's it for now, guys. Data coming. Enjoy the session. Thanks.